There's this powerful, almost invisible system that's driving some of the biggest corporate valuations we've ever seen. And it goes way beyond just having a popular product. It's a self-reinforcing loop that just fuels explosive growth. So let's dig into how it actually works.
Okay, let's just start with a number, $5 trillion. Just a few years back, a number like this for a single company would have sounded like something out of a sci-fi movie, right? But today, companies like Nvidia are getting pretty close. So the real question is, how is that even possible?
A valuation that high can't just come from selling a lot of stuff. No way. It means there's got to be something else going on. A deeper financial engine working behind the scenes, one that most of us never really see.
And look, this isn't some random magic trick. It's a system. A very deliberate, self-reinforcing loop where investment creates demand, that demand drives revenue, the revenue builds up a higher valuation, and then that valuation unlocks the money to start the whole cycle all over again, but bigger.
All right, so let's get beyond the usual headlines. The AI is booming stuff. We're going to look at the actual financial plumbing that makes these massive trillion-dollar valuations happen. For most of us, business is pretty simple, right? It's a straight line. You do a job, you make a sale, you get paid. Simple. But when you get to this massive, massive scale, that straight line, well, it starts to bend back on itself. It becomes a loop, a cycle that starts to feed itself.
So, the first turn of this wheel, it all starts with a pretty wild idea. Something that sounds kind of backwards at first. You invest in your own demand. Instead of just looking for customers, you actively help create them.
Yeah, think about it. Instead of just selling your product and crossing your fingers, hoping your customers do well, you can actually step in and help make sure they succeed. You put money into their growth, knowing that as they get bigger, their need for your product is going to grow right along with them. And right there, the whole relationship just flips on its head. You're not just a supplier anymore. Suddenly, you're a backer, you're a partner, you're basically a part owner in the very demand you're trying to create. There's this fantastic line that just perfectly nails the efficiency here. The same dollar begins to work in two places at once. It's brilliant, right? It's helping your customer grow, and at the same time, it's fueling your own sales down the road. That is an incredibly powerful dynamic. Okay, so once that revenue starts pouring in from those customers you've helped grow, the next part of the loop kicks into gear. And now the whole story shifts from just sales numbers to how the market perceives you. See, at this stage, investors and, the whole market, they stop looking at just what the company is selling today. Their focus shifts. They start looking at its potential. They're trying to figure out just how huge this thing could get if the momentum keeps up. And really, that's what valuation is all about. It's not just some static number on a stock ticker. It's a collective belief, like a shared story about how much a company is going to earn in the future. And you might be asking, why do markets go so crazy for this? Well, it's because this kind of system is sending all the perfect signals. The demand, it's real, and those customers are committed. The company, it's becoming super hard to replace. All of a sudden, future income feels way more secure. It feels less like a wish and more like a sure thing. And that builds some serious confidence. Okay, and all that confidence, it leads us to the final piece of the puzzle, the part that closes the loop and really gets it spinning. We call it the capital flywheel. And this is so important to get. A high valuation, it's not just a score on a leaderboard. It's not just for bragging rights. The real power of that number is the access it gives you. Access to money, to partners, to all sorts of opportunities that were totally off the table before. So what does that access actually look like in the real world? Well, it means you get access to cheaper capital, a lot cheaper. Suddenly, you can get loans with way better terms, lower interest rates. Big, serious funds are lining up to invest in you. Strategic partners, they're practically offering to finance you. Basically, getting money becomes a whole lot easier and a whole lot cheaper. Okay, there's a simple analogy that makes this whole thing just click. The tool shop. Imagine a tool shop, right? But instead of just selling tools, it gives money to local builders. Now, those builders can go build more houses. And what do they need to build more houses? More tools. So where do they buy them? From the very same shop that gave them the money in the first place. See? The shop's investment circles right back around to sales. And that's the magic moment. With all that new cheap cash, the company can turn around and reinvest in its customers, but on a way bigger scale this time. This just puts the whole loop into overdrive. The next cycle is faster, it's more powerful, and it drives revenue and that valuation even higher. The whole thing just feeds on itself. All right, so now we get the how we see the machine. So let's zoom out and ask a much bigger question. Is this whole system a good thing or a bad thing? First off, it's important to realize this kind of pattern isn't actually new. Not at all. Wealthy investor networks have been doing stuff like this for generations. The real difference today is just the mind-blowing scale. We're talking about corporations using billions, sometimes even trillions of dollars to play the exact same game. And when you look at the impact, there are really two sides to the coin here. On the one hand, the good side, this system can fund huge, really important stuff. We're talking data centers, new energy grids, things that can genuinely accelerate progress for all of us. But on the other hand, because it's a self-reinforcing loop, well, it can also concentrate a ton of wealth and power, and that could really widen the gap between the people inside this system and everyone else. And that leaves us with the big final question, right? Is this powerful financial engine mainly a tool for building the future, for creating entirely new industries? Or is it just a machine that, if we don't watch it, will simply make the powerful even more powerful? Definitely something to chew on.